Good afternoon, everybody. Today is Wednesday, the 26th of February, and we've got a lot to talk about with this market here. So let me get this screen shared and we'll take a look at some charts. As always, we will just kind of start out with the markets overall, and then I will start to look at some of the individual stocks that you're interested in. I'm sure there are going to be a lot of the same names because we've had such a big sell-off in many of the leaders here. And let's just start with the S&P 500. Now, on the daily time frame, and actually, let's just start on the weekly time frame to really frame it. We're still in an uptrend. We're still in a major uptrend. We're holding this rising 20-week moving average. That 20-week is above the 31-week, which is above the 42-week moving average. And that tells us that longer term, we still are in a bull market. Now, maybe we're starting to turn sideways before, maybe this is just a big, distribution. But if it's distribution, it's going to start to look like the stock that I pointed out last night, which is Microsoft. Microsoft has been in this longer term uptrend as well, with those weekly moving averages stacked one above each other. It's not until we start to see the moving averages crossover that we see indecision. Moving average crossovers are not a reason to act. They're a reason to look at the market and say we have mixed messages on different time frames. So we're either undergoing accumulation after a decline, or we're undergoing distribution before a drop. Now, just because we had a prior rally doesn't mean it might just trap short sellers. What it doesn't mean is we're just automatically going lower and we can expect something like this to happen. We still have to look at it and say, okay, now it's guilty till proven innocent, but it has the ability to be proven innocent by showing us enough evidence that the buyers have regained control. For now, it's highly suspicious. We're below a declining 20, 50, and 200-day moving average. All of those moving averages are heading lower, and that is typically when the markets, begin their bear market. Typically. Now, it doesn't mean it's going to happen. Just to say, so are we right now in Microsoft in a similar spot as over here? That's what it looks like to me. So it means that, yeah, we'll get bounces in Microsoft. And one of those bounces might end up saying, it might end up rallying up like this, carving out a higher low, and then continuing higher. That's still a possibility. A downside is not guaranteed, but we look at it and say, is this a stock I want to be buying right now? And my answer is no. It's not much different than, Occidental Petroleum that is still in a longer term downtrend as well. It broke down. Now it's not seeing a massive decline. It's starting to stabilize in this area, but it still has all those moving averages on the weekly time frame declining, which tells us it's guilty until proven innocent. So back to the S&P 500. That's not what this market looks like. We saw in the 2022, 2021, 2022 high that we saw some initial weakness. The moving averages crossed over, and then we saw lower highs and lower lows, and then we started to turn back up. So it gives us reason for caution. But again, we're in a primary uptrend in this market. So on the left is the daily time frame, and I've got that orange anchored volume weighted average price from the election. The blue one is from the beginning of the year, and you can see we're battling that right here, right now, today. So we're below a declining 5-day moving average on the 30-minute time frame on the right. That tells me this should be treated as a bounce in an intermediate term downtrend. We still have a pattern here of lower highs and lower lows. Now, it doesn't mean that the market can't do this, but it says odds favor that this is a bounce, and we're going to see instead that this market will maybe rally a couple more days, flirt with the anchor off of the low from yesterday, and then begin to break down and maybe head down to a lower low. But we're not there yet. So I'm looking at this market currently as cautious. We're bouncing. We're bouncing in the Nasdaq. The Nasdaq found buyers along this trend line right here, but we're below a 20-day moving average. We're below a 50-day moving average. We're below a declining 5-day moving average. This is a bounce within an intermediate term downtrend. It doesn't mean you can't make money trading in this environment. But the way you do it is you start it out as a day trade. If that day trade works for you, You take a little bit of your profits off just in case, we get a gap lower, and you raise your stop on the balance and listen to the message of the market. What is the market telling us? Now, everyone wants to know about the semiconductors and in particular Nvidia. Now, the thing about the semiconductors, and this is something I've pointed out, is that we were making a pattern of higher highs and higher lows above a rising 5-day moving average. And that over here, if you recall, I was saying, as long as we're above that 5-day moving average, sure, you can make money on the long side. But if it breaks the pattern, and this is where it did it right here, then it's time to move to the sidelines. Now, we're stuck in this bigger range on the daily time frame. That's what this big mess is right here. Let me just redraw it. This is the bottom end of that range. This is the top end of that range. And now, we're approaching that midpoint. So it's just a range-bound market. We're getting a bounce in that range-bound market. So what does that mean for Nvidia? Because I'll just preempt this because I'm sure that people are going to be asking about Nvidia. Nvidia is also, this is a perfect example also. We saw that the buyers regained control after that deep seek sell-off. And once the buyers had control and it was making a pattern of higher highs and higher lows above a rising 5-day moving average, then we saw this high, we saw a lower high, we saw a high, a test of the 5-day moving average. And right here is where the sellers took control. That's your cue that if you were long somewhere in here, that was your cue to take profits. Now we've got an event tonight. I have no value to provide here, truthfully. A lot of people will say Nvidia is going to do this or it's going to do that. Nobody knows what's going to happen. Here's where we are. We're in the middle of what's been a pretty big range here recently. And we're right up against that declining 50-day moving average. That's that dashed 50 blue line, rather. We're right to the anchor from the election. We're holding above the year-to-date anchor. It's just a mess. Anyone who's looking for an edge or pretends to have an edge in here, I think they're making stuff up. I just don't see how you can look at a chart and say you have an advantage. If anything, this is likely a source of supply. Now, if we get hit hard, do we come down to the anchor from this low right here at 120? That's certainly a possibility, a level I would be interested in. If we rally up, are we going to find supply at the anchor off of this recent high? Or is it going to be the anchor off of the all-time high, which was made back in here? Is that, well, we're already above that. So, I would be aware of this as a possible place where there might be supply at 135. You've got to remember, we just rallied from 125. So we're up about 8%, 7 or 8% off the lows here. I just don't see, everyone's interested in and talks about Nvidia, but right now there's just no edge from the charts. So let's see how it shakes out after is the way I would say to look at Nvidia. Let me take a look where that chat is. And there we go. We've got some, here we go. So how about looking at a couple of names? One, let's look at Palantir because everyone wants to know about Palantir. And this is, same story, the 5-day moving average. That's that orange line. When you're swing trading and you look at a stock and you say, I want to be involved for a swing trade, you don't say my price target is 100 and I'm going to sell at 100 because, you would have given up the gains on that gap. You don't say, well, 110 or whatever. You look at it and say, as long as the definition of trend on the shorter term time frame, and that's a 30-minute time frame on the right, as long as we have higher lows, then we're going to stay with the trend. But based on the definition of trend, if we break that pattern of higher lows, well, then the sellers are in control. And by the way, Apple, the sellers just took control today. We've been above this rising 5-day moving average and we've been showing higher lows along it. Today we gapped lower. So I think that if you're involved in Apple, it's likely that Apple will bleed off at least a few days before the buyers can regain control. Meta was the same way. Same exact story. We had, 17-day up days, and those up days were showing higher lows above a rising 5-day moving average. When we broke below that 5-day moving average, that's when the profit taking began. Now it seems likely that if Meta is going to continue higher, it's likely going to do this, and then we'll see how it handles the month-to-date anchor, etc. So let's take a look at Net. Net is right now on an important level. So let's start with the weekly time frame. The weekly time frame, we're in a beautiful uptrend. It broke this, let's just call this a cup and handle right here on the weekly time frame. It broke that. The measured move from that would be the height of this. Let's just call it 45 up to 110. So that would be 65 points. Add that to 110. That would give you a price target about 175. So it hit its price target. It's pulling back now on the daily time frame. We're still holding, and we're at a critical level right here. This is the year-to-date anchored volume-weighted average price. Yesterday, we came down and touched it. So, on the daily time frame, we're at an important level of interest. We don't have evidence quite yet that the buyers have taken control. Today is what's looking like an inside day, at least so far. And when we look at, same story. We saw a pattern of higher lows above a rising 5-day moving average. It broke that. And now, over the last couple weeks, we've seen a very clear pattern which continues to persist. And that pattern is lower highs and lower lows below a declining 5-day moving average. So I always look at these stocks as, longer term, it's still in an enormous uptrend. It's having a well-deserved correction. And we now see that correction is still underway. The way that I would look at it is maybe it rallies up like this and makes a higher high. But if we don't have a higher low first, I wouldn't trust it, especially with a declining 5-day moving average. We want to see it maybe run up there, sucker some people in, and then do this. And as that 5-day moving average flattens out in a couple of days, then I would want to be a buyer right here with a stop below this higher low. Again, from a swing trader's perspective, that's my perspective. Howard is more in. Howard's asking about this stock. Howard Linson, the CEO of StockTwits, he's asking about this. So longer term, it's still in an uptrend. If you're an investor, you give it the benefit of the doubt. I would say though, this is a critical level for it to hold. What we might end up happening, sometimes happens, is we see a slight undercut of that prior low and then it recovers. So, if it's, bounces up to that 5-day moving average up near 152, pulls back, a lot of times you'll see you get a slight undercut and that ends up being the low because people set their stops below that. Uneducated short sellers get involved. But if the fundamentals support a stock like this, then I think that, it's in an important level, and it's like a lot of stocks trying to prove itself, just like DoorDash. DoorDash, weekly chart, we're in a nice uptrend here, but it's extended. It doesn't mean it can't continue to move higher, but the stock has tripled, off the lows from 2023. Again, doesn't mean it can't continue to move higher, but the longer that trend persists, the greater the volatility will tend to be, as we get its corrections. However, Dash is not doing that. It is holding as well right at the year-to-date anchor. That's an important inflection point, the year-to-date anchor. It tells us that the buyers are defending this level and they're committed to it. So, just like I had outlined in net, I think that this rally right here, 187 to 203. So we've just seen a 10% rally off of these lows. I think you're likely to see it drift down because you don't trust rallies with a declining 5-day moving average. It's more likely to drift lower in the couple of days, maybe carve out something that looks like this, and then we can have greater expectation of a true uptrend continuing right here with a stop below there. Again, my time frame is swing trades. So let me just go back to Palantir real quick because I didn't really follow through on that one. And Palantir is stuck below the year-to-date anchor, but it's at the 50-day moving average. It's below the anchor from the beginning of the month. It's below a declining 5-day moving average. So, and it's not getting much bounce here. A lot of other stocks, like Net, like Dash, are getting a stronger bounce. Palantir seems to be suffering from a little bit more selling pressure here that's kind of capping the upside. Doesn't mean that can't change, and maybe it does something like this. And in fact, I'm long a little bit for a day trade here, starting out as a day trade. I purchased it right here as it broke above this little high for the day because that was our higher high above the daily VWAP and above the VWAP from 3 days ago, which seemed to have been holding it back. And now my stop is had started out under here. My stop is here. If we start to push higher again, I'm going to raise my stop up under there, and we'll see what the market gives me. I'm not targeting anything on the upside, but I'm going to say if it can't survive as a day trade, well, then I want to look at it and say, what's the opportunity here? How much opportunity is the stock going to allow me? It's a little bit concerning that it hasn't bounced, yet very much after, the largest sell-off it's seen in quite some time. That's a 40-point move. That's a 30% decline. The buyers aren't rushing in right here yet. Doesn't mean they won't, but I'm cautiously optimistic. But keeping, the main caution is we're below a declining 5-day moving average. So I'm looking at this strictly for now as a day trade. If it rallies up to 93 and change, I'll take some off, and I'll probably hold some of the balance because I will have had a strong enough cushion in there that I'm in that position where I'm in from a position of strength. I've reduced my cost basis by selling some into strength, and I feel like maybe we can continue to bounce. But and if it ran up to that 5-day moving average and began to pull back, I would probably sell another third. But if it did this, well, then I would continue to hold that final third just in case it does stage this huge rally. It's not all moonbeams and rockets and all these emojis that people saying, Palantir's about to moon. That's an uneducated way of looking at it. You have to let the market prove itself to us. Our opinion doesn't matter. How about Google? Google has, it's broken. It's been below the year-to-date anchor since this gap lower. We take an anchor off of that gap right here, and you can see that sellers are use that catalyst of the earnings. Then they gain control. It's lower highs and lower lows below a declining 5-day moving average. It's right now here at the 200-day moving average. So dip buyers at the 50-day moving average aren't making money. Dip buyers at the 200-day moving average aren't making money yet. This is our week-to-date volume weighted. I'm sorry, that's the 2-day volume weighted average price. I should actually put this over here and make this the week-to-date volume weighted average price. So for the week, we're losing, and it's broken. Like, it needs to heal. This is looking at the weekly chart. It's still in a longer term uptrend. You can draw a trend line, and who knows, maybe it's going to come down and test that trend line before it bounces again. But right now it's showing a pattern on the daily time frame that the sellers are in control. So it's not likely to reverse all at once. Look at the last time we had a significant sell-off with Google, and we had the 20-day moving average below the 50. Of course, we got some bounces in there, but now maybe it's going to take for that, some time for that 50-day moving average, that maybe it continues like this, rallies up, and does something like this, and it's going to take 3-4 weeks before that 50-day moving average flattens out again. So I see no hurry to get involved in Google, not yet. Not with it making, a very clear pattern here. At a minimum, wait for that pattern of lower highs and lower lows to reverse itself, and ideally above a flat to rising 5-day moving average. And even better would be if it was above a rising 20 and 50-day moving average. Until it does that, I would not trust rally attempts in Google. How about Broadcom? Broadcom, it's also broken. I was looking at it for a buy over here if it broke this range. Instead, it broke down. 50-day moving average buyers are losing money, right? It looked like it was holding support at the 50-day moving average, but then you go down to a 65-minute time frame, and what do you see? We've got a stock below the declining 5-day moving average. It's just a choppy mess in here, and it's below the anchor from this gap higher. It's just back and forth. It's really a stock that my style wouldn't be this, but if it were to undercut this level and then maybe turn higher, then it could rally up into here. But for now, it's just digesting this big gap higher, and it's that's kind of the history, or at least the recent history of this stock. Gap up and then do nothing for 6 months. Now, it doesn't mean that's going to happen again, but right now it just looks like it's in this range bound environment that, sure, you'll get bounces. And if you want to trade it off shorter term time frames, if you're long in here now, I think your stop would probably go underneath this low at the week to date volume weighted average price. But, it's a stock that's undergoing pressure. So wait for the buyers to regain control before you decide to get involved. NEHC, that's not one I've heard of. Let's take a look. And that's probably why. Average daily volume is only 251,000 shares. So this was a recent IPO. It looks like a SPAC because it came at 10. And this SPAC is broken. It looks like it's being left for dead in here. I don't see anything compelling about this stock. It's back below declining. It tried to rally over here. It broke a lower low below the 5-day moving average. It just looks like dead money to me. Oil and gas, and again, it's a SPAC. So we're below the year-to-date anchor. We're below the anchor from the IPO. When you look at the anchor from the IPO, I pointed some of these out last night. The anchor from the IPO in Tempest. It came right to that. Today it's getting a bounce, and it's a bounce, but it's a bounce where we still have, this recent pattern. And here's another one, that rising 5-day moving average. As soon as it broke below that 5-day moving average, now we have a pattern of lower highs and lower lows. And, is this a higher high? Higher than what? I don't know. In order for this to really turn and have confidence that it's turned, I would want to see it do something like this, maybe rally up to that 5, and that's a great trade up into there. And if it were to break, if let's say you're long, if it were to break this, I would get out and then look for it to maybe come down like this. Same story. If this is going to structurally shift for more than a bounce, then you want to be a buyer for, if you're for a swing trade somewhere over here. Right now, we're still in a downtrend. That's, and it's bouncing, and it's a nice bounce from the anchor from the IPO. But those are trades to be managed on shorter term time frames and say, okay, here's today's volume weighted average price. Here's yesterday's volume weighted average price. This morning it made for a good entry. In fact, I traded this on the long side today. But it is now, looking at a 2-minute chart, this is what I was pointing out to subscribers, that this was the pattern that I was looking at. These were the higher lows. I got out right here because that's when those higher lows, that pattern of higher lows was interrupted. I went into this saying, I'm not looking for a major turn in this stock because it has a declining 5-day moving average. So I'll get a bounce maybe, and I did get a bounce, but I'm not going to hold on to my belief that, hey, Pelosi owns this stock, so it's got to triple by the end of next week. Instead, I'm going to listen to the definition of trend. It came up to this purple anchor from 5 days ago, hit it twice, made a lower low after this lower high, so I got out of it. And maybe I gave my stock away, and I honestly don't care. If it continues to go higher, it can go without me. I'm looking for the bigger structural move in a stock like this one. I can't believe people still talk about GME. Anyways, I've got nothing to say about it. I mean, it's trying to hold the 200-day moving average. And one good thing, I suppose, is it just undercut this low, after a pretty significant decline. So we often get a bounce after that. So if you're going to be a buyer in here, your worst case stop goes below yesterday's low. How about, we already spoke about Nvidia. How about PayPal? PayPal's another busted momentum name. And, this one, it's just broken in here. It's broken below the anchor from this gap up. Let's see if maybe, we can put an anchor off of this low and see where that kind of ties in. So I don't know. It looks, the sellers are in control. It's below declining 20 and 50-day moving average. It's not holding the 200-day moving average. It suckered people in on the open yesterday. You should have known not to trust that gap up because we had a declining 5-day moving average. And it's just a pattern of lower highs and lower lows. Let this thing settle down. It's going to take time. People were, this is no different than, when it topped out over here. I remember every little rally in this stock on the way down, people were telling me it was the low. And, now we've got this stock back down below the anchor from the beginning, from what had been resistance. This anchor had been resistance. It supported it. Now it's back below it. I would not trust PayPal. It looks like there's, a lot of damage done in here, and that damage isn't going to readily, easily fix itself. Let's see, earnings have been reported. So actually, that was the earnings report right there. So whatever the reason was, people, use that as a catalyst for selling. How about BlackBerry? I haven't looked at that BlackBerry in a while. BlackBerry's been a strong mover over the last 6 months or so, 5 months. And anyways, we've got, so less than that, actually 3 months. We've got it right down to the year-to-date anchor. So this is a level of interest. When we come down to something like the year-to-date anchor, we say, okay, let's look at this and see if the buyers are gaining control. Do we have evidence the buyers are gaining control? Well, we're getting a bounce in there, but what I determine as evidence is we had this high and we had this low. We had a lower low, and that would have been the lower high. Now we have lower highs and we have lower lows. So this looks like no different than this bounce, and this bounce. So it needs time, just like most of these stocks that have been hit hard. Maybe it comes down in the next day or two and undercuts that slightly, then it gets going. But for now, I think you're in risky waters buying this stock because the path of least resistance over the last 2 weeks below a declining 5-day is below the declining 5-day moving average, a pattern of lower highs and lower lows. So to me, it doesn't make sense to buy this stock yet. And most of these stocks are telling us that. Most stocks are saying, hey, it's not good. A stock that I shared on Twitter earlier today is Clearwater. Now, here's a stock, you look at the weekly time frame, it's above all those moving averages. We just broke some resistance over here on earnings a couple, last week. So when we look at the daily time frame, we say, okay, where is it in relation to the anchor from the highest point this year? And that, or actually last year. So that had been resistance, turned to support. So when we look at this stock, we say we've got now a rising 20 and 50-day moving average. We've got the stock on a 30-minute time frame showing that we just broke this short-term pattern of lower highs and lower lows. So we broke that, and now, my stop is underneath this level at this point. That might be too tight, but this, I'm not giving the stock a lot of room. And that's my stop on the balance. What I always do, especially in an environment like this, is on the first day, if I get a move up to daily R2, I either sell some exactly at that point or use the 2-minute exit. The 2-minute exit means when we approach that daily R2, we then look at it and say, my stop goes under here. As this bar closes and this one begins, my stop goes under here, and keep raising it up under there. And basically you would have gotten stopped out at the same exact price as daily R2, but you gave it the opportunity to continue to move. So I have a 2/3 position in here, and I'm not going to give it a lot of room in spite of what this daily chart looks like. That's my risk management. I look at it very tight in that regard. Let's do something else real quick. Let's look at Bitcoin before we leave. Let me reshare a screen and get that trading view up so we can quickly share a screen. Let's see what screen we're looking for. And is it this one? It looks like it is. So yeah, there's the Bitcoin. And Bitcoin, as I've been talking about for the last month, the more time support is tested at that anchored VWAP from the election, the more likely it was to fail. And as I said, I was looking to buy some at this anchor. I bought a small piece there. I added twice as much here. And now on the shorter term time frame, this is important. We just made a lower low today. If it can hold above that, then I think you're going to see it rally maybe up towards that 90,000 level initially. So maybe it rallies up to there. And if it can come up to here, I will sell most of what I bought because I think that it's still likely that we're going to come down to the anchor from the August low of last year. That would bring us down towards 82. So I'm playing a little bit in between to me, Bitcoin trend is broken. There's likely to be a lot of supply. Prior support tends to act as resistance. If you do a volume profile, you can see here, clicking it just to the election, that there is a lot of transactions up in here. There's a lot of volume that took place. So it's likely that this, why does support tend to act as resistance? Because as it rallies up to that zone, all the people who are buying in here over the last several months, the last, 3-4 months in here, a lot of those people are going to say, oh, I bought too late. I'm going to look to break even. It tries to chew through it. Instead, gets more people involved. Then you have the sharp move lower often. So I hope that was helpful. We'll do it again next week. Actually, maybe not next week. I'll update you on that. But thank you for tuning in, everybody, and joining me here. We'll do it again soon. Thank you.